Hi students, we are taking up today subsidiary books. What is subsidiary book? What is the concept behind it? Let us discuss. We have already seen that if we go on making individual journal entries for each and every transaction, and if these are accommodated in a single journal book, the journal book will be very cumbersome, is it not? However, we also find that frequently the same kind of journal entries are made in an organization. For example, it may be purchase account, debtor to supplier account for recording credit purchases, or customer account debtor to sales account for recording credit sales, supplier account debtor to purchase return account for return of previously made credit purchases. Is it not? Sales return account debtor to customer for return of sold goods back from customers, etc. These are all transactions frequently happening. And of course, there are majority of other journal entries involving either cash account or bank account as being one aspect of the journal entry also there. One aspect may be either debit entry or credit entry. Okay. Well, in a journal entry, one aspect will be either debit or credit. By way of either debit or credit, it will be either cash or bank. So cash transactions are also there very, very frequently. Transactions involving cash or bank are most common in a business. Don't you think so? Every now and then it is happening. Therefore, don't you think that we can minimize our work and make it more systematic if we subdivide these similar journal entries and accommodate them in separate journal book, rather journal books? Let's assume that in a particular month, we have made 100 number of credit purchases from various suppliers. I repeat, we are assuming in a particular month, 100 number of credit purchases we have made from various suppliers. We can accommodate these credit purchases in a separate book called purchase day book, and we will chronologically enter these credit purchases in this book. Is it not convenient? Yes. Suppose our first credit purchase of the month is from one Mr. X. Let's assume it is from Mr. X. We will enter the details of this purchase, such as date of purchase, his invoice number, his name, bill amount, etc. in the purchase day book. Consider the net amount of this invoice as rupees 10,000. For example, rupees 10,000. By just entering these details in the purchase day book, we have practically made a journal entry as follows. By just entering his name in the purchase day book, showing the relevant amount, practically a journal entry we made. What is the journal entry? Purchase account debtor, rupees 10,000 to X account, rupees 10,000. This is because the debit aspect of the purchase day book is implied as purchase account. And by just entering a purchase invoice details in the subsidiary book, we have practically created a journal entry. This is the usefulness of a day book. However, we will list down in similar way other 99 credit purchases in the purchase day book chronologically. And the consolidated total amount for all these 100 purchases made during the month is arrived at. I repeat, consolidated total for the entire 100 number of purchases listed down in the purchase book is arrived at, and thereafter a single journal entry will be made as follows. Purchase account debtor with the total amount of all the 100 number of credit purchases to various suppliers with the same amount. Then only journal entry will be okay. Debit has to be equivalent to credit. Only consolidated amount will be shown. And now, as far as posting of the journal entry into ledger is concerned, we have to post now from the journal to ledger. Purchase account will be debited with this consolidated amount for 100 number of purchases, and every supplier or creditor will be individually credited with their respective bill amount. We don't need to break up the purchase entire amount we can show. However, it is essential. We have to give credit to the individual suppliers or creditors. In the same way, various credit sales, purchase returns, sales returns, etc. during the month are also dealt with in separate day books and subsequently posted in the respective ledger. Therefore, subsidiary books ensure minimizing the work of numerous journal entries being made in a journal, and also makes the accounting work very systematic. It minimizes the work and also makes it very systematic. Okay, this is in a simple lucid language, as it is done always, I told you. But in an exam purpose, you need not write in such a lucid language. At that time, what do you do? For that, suppose you are asked to either describe or define purchase, not purchase necessarily, define a subsidiary book. Okay, or write a short note or a little more marks, like something extra, detailedly write about subsidiary books. How will you answer it? That I am going to show you now. Notes on subsidiary books. This is meant for your exam purpose. Concept already you have got. I explained in a very lucid way as best as I could. Okay, this is for your exam purpose. Well, suppose they ask you, what are the various subsidiary books of accounts which may replace a journal to an extent? Explain in brief the transactions which are recorded in these books. Answer. Journal may be divided into subsidiary books or special journals. Special journals are used for recording transactions of frequent nature. They are also known as special purpose subsidiary books. Okay, suppose they twist the questions and ask, you can, by the sentence itself, you can manage it. These are as follows. Cash book. It is used to record receipts and payment of cash and bank. Cash book is the predominant subsidiary book. Okay, I need to give one or more classes about cash book itself later on. Purchases book. It is used to record credit purchases of goods. Purchases returns books. It is used to record the returns of goods previously purchased. Sales book. It is used to record the credit sale of goods. Sales return book. It is used to record the returns made by the customers to whom goods were sold previously. Bills receivable book. It is used to record the receipts of promissory notes, hundies, or bills payable. Bills payable book is used to record the issue of promissory notes, hundies, or bills payable. Journal proper. You will see that these 7 things may not suffice. There will be things outside the purview of these 7 also. How will you manage them? That will be done through this 8th one, that is called journal proper. What is that all about? It records those transactions which cannot be recorded in any of the subsidiary books mentioned above. Example, opening entries, closing entries, adjustment entries, transfer entries, sales and purchase of fixed assets on credit, etc. Journal proper also very important. We will be discussing it later on. I am not taking up anything further in this class because the shorter the video, the better. Okay. So thank you, students. As always, please keep practicing and take a lot of interest in this subject. It's a very nice subject. Accountancy is a very nice subject. Please take a lot of interest. Thank you. See you soon.